Hey, everyone, welcome back to FX Limit, where we break down everything you need to know to become a more profitable and confident Forex trader. Today, we're diving into one of the most exciting but tricky parts of Forex trading, news trading strategies. If you've ever wondered how traders can turn those massive news spikes to their advantage, you're in the right place. We're going to cover the best ways to trade around news events, the key strategies you need, and how tools like the FX Limit Apex Trend Indicator can give you an edge in these high-stakes situations. So, why trade the news? Well, the answer is simple: volatility. When major news drops, the Forex market can experience massive movements in a matter of seconds. This volatility can create both opportunities and risks for traders, and knowing how to navigate this landscape can be highly profitable. But let's be clear, news trading isn't just about catching a random spike and hoping for the best. It's about understanding the dynamics at play, having a plan, and using the right strategies. Now, let's jump into the core strategies you can use for news trading. First up, the straddle trade. This is a popular approach where traders set up buy and sell stop orders just above and below the current market price. The idea is that when the news hits, price will likely break out in one direction with a big move. By setting both buy and sell orders, you're essentially saying, I don't care which way the market goes. I just want to catch the ride. Of course, there are nuances to this. You want to place your orders at a reasonable distance from the current price so that you avoid getting triggered by minor fluctuations before the big move. Now, here's where the Apex Trend Indicator can come into play. By monitoring the trend direction before the news event, you can get a sense of market sentiment. If the trend is already showing strong upward or downward momentum, this could give you confidence to focus on that side of the trade or adjust your straddle accordingly. Remember, straddle trades can be powerful, but they're best used on significant news releases where you expect a substantial market reaction. The next strategy I want to talk about is the post-news trend strategy. Unlike the straddle, where you're trying to capture the immediate spike, with the post-news trend strategy, you wait until the initial volatility settles down. Many traders find that the initial news reaction is followed by a stronger trend as the market digests the information. Here's where tools like the Apex Trend Indicator really shine. After the dust settles, the Apex Trend Indicator can help confirm the new trend direction, showing clear buy or sell signals that let you know when to jump in. This approach allows you to avoid the whipsaws that sometimes happen right after news breaks and get in once the market picks a direction. Next up is the fade trade, which is a bit riskier but can be rewarding if done right. With this strategy, you're essentially looking for overreactions in the market. Sometimes, traders panic, causing exaggerated price movements, and after the dust settles, prices tend to pull back. This strategy works particularly well when the news isn't as impactful as anticipated. For instance, let's say a central bank hints at a rate hike, but without giving any solid commitment. The initial reaction might be a strong move in one direction, but if the news wasn't that strong, the price could reverse shortly after. To use this strategy effectively, you'll need to keep a close eye on your charts. The Apex Trend Indicator can be useful here as it provides clear reversal signals. If the indicator shows a strong initial spike but then signals a trend reversal, this might be your cue to consider a fade trade. However, remember that fading the news requires experience and a solid understanding of market psychology. It's not for the faint of heart. Now, let's talk about timing and execution. News events happen quickly, and missing a beat can mean missing the trade entirely. The best way to stay on top of things is by setting alerts. With the Apex Trend Indicator, you can set up real-time alerts directly to your mobile or desktop, so you know the moment a trend starts forming. This feature can be a game changer, especially for news trading. Imagine getting an alert right after a news-driven trend starts to form. This kind of timely notification can make the difference between catching a profitable trend and chasing it after it's too late. Speaking of timing, another important aspect of news trading is knowing which events are likely to move the market. Not all news is created equal. Central bank meetings, employment reports, GDP releases. These are the types of high-impact events that can cause big movements. Economic calendars are essential tools for tracking these events, and most trading platforms will include one. Make sure you're aware of the upcoming news and its potential impact. Let's touch on risk management, which is crucial for any news trading strategy. Trading around news events is risky because price can whipsaw and stop you out if you don't have a solid plan. Always use stop losses, and make sure they're at levels that reflect the potential volatility of the event. The Apex Trend Indicator can help here too by giving you take profit and stop loss levels based on the trend's strength and direction. This is particularly useful in news trading, where having a precise exit strategy can save you from unnecessary losses. For example, the Apex Trend Indicator can give you up to 3 take profit levels, allowing you to secure partial profits as the trade moves in your favor. This multi-tiered approach to taking profits can be incredibly effective during news events, where price may hit an initial target but then pull back before resuming in the trend direction. And since the Apex Trend Indicator doesn't repaint, you can trust the signals it provides, knowing they won't change once they appear. A common mistake among traders new to news trading is over-leveraging, thinking that the big moves justify taking on more risk. But remember, while news can bring big gains, it can also bring big losses. So stick to your trading plan, manage your lot sizes, and don't get swept up in the excitement. Using the Apex Trend Indicator, you can make more informed decisions based on actual trends rather than emotions. To recap, if you're looking to trade the news effectively, remember these key strategies. Use the straddle to catch the immediate moves. Wait for the post-news trend if you prefer a steadier trade. And consider fading exaggerated reactions if you have experience with market psychology. And, of course, use tools like the Apex Trend Indicator to confirm your entries and exits. Having this tool by your side allows you to scan multiple pairs and timeframes to find where the trend is strongest, making it easier to decide which pairs to focus on during those critical news moments. That's it for today's video. I hope you found these strategies helpful and that you're feeling more confident about trading around news events. Remember, the Forex market is fast-paced and unpredictable, but with the right strategies and tools, you can turn that volatility into your advantage. If you're interested in the Apex Trend Indicator, check out the link in the description. Thanks for tuning in to FX Limit. Don't forget to like, subscribe, and hit the notification bell so you never miss out on our latest tips and insights. See you next time, and happy trading!